Our governments are frequently criticized for their inefficiency, particularly when it comes to major infrastructure projects. The Government Infrastructure Plan, which aims to spend more than $1 trillion on repairing and updating infrastructure across the nation, has made headlines in the US. People are already scorning at the initiative, saying that it won't be able to fix the nation's deteriorating infrastructure. And this is merely the beginning. Stick with us till the end as we go into detail on how China is facing a serious debt crisis. This whole situation is pretty unfortunate, we must say, because investing in infrastructure can be one of the best decisions a nation can make. It serves as a sort of stimulant in the short term. Construction workers, engineers, city planners, and possibly even a few environmental specialists are required to create bridges and roads. This instantly reduces unemployment and puts money in people's pockets, much like a stimulus check. Contrary to a stimulus check, the money is supposed to be used to create something that would benefit the economy long after the regular stimulus checks would have been forgotten. Building initiatives like the Hoover Dam served in part as an excellent means of placing people back to work during the slump. Nearly a century later, the dam is still supplying electricity and a reservoir. In a nutshell, infrastructure spending is great. In the 20 years that China took to build out the largest rail network in the world, California has spent 20 years designing one. And if you think we're just picking on America, let's try another city. The city of Sydney, Australia, spent more than $3 billion and more than 4 years building trams, which have all the traffic problems of buses and all the inflexibility of trains. It's understandable why people believe that everything China is doing is effective, but sadly this is not the case. China's high-speed rail system undoubtedly served as the nation's infrastructure development's focal point. There are many people living in China, which is a very big country. Additionally, owning a car is considered something of a luxury in this nation. Because of this, the government needed a strong rail network to give citizens an affordable and efficient means of transportation. In the early 2000s, everything changed. The country's plan to open up to the world was already well underway at this point. Young people were migrating from their tiny hometowns to big cities in order to supply the labor market required to support the country's expanding industrial sector. Prior to the introduction of high-speed rail, the majority of workers were content to take bus trips, which would frequently take days or even weeks to travel comparatively little distances. The Chinese government had already started developing certain high-speed rail systems by 2008, but the global financial crisis accelerated these efforts. China, of course, was not exempt from the effects of the GFC. In fact, it was far more dependent on trade at that time than it is now, and trade intensity dropped dramatically during this time. Millions of people were employed as a result of the high-speed rail development, which succeeded in its goal. The Beijing to Shanghai track alone had over 100,000 direct workers, not to mention the additional workers who worked in factories producing steel and cement, delivering supplies to the construction site, or merely supplying goods and services to the workers as they gradually built out these tracks. China cleverly avoided entering a recession in significant part as a result of this high-speed rail expansion. A brilliant move indeed. But then again, this is where the issues begin. The rail program has been plagued by corruption since its inception, which is somewhat typical of many government construction projects, especially those in China. However, because this was one of the largest and most widely publicized projects ever, the corruption scandals had to be bigger and bolder as well. A collision between two high-speed trains that occurred in 2011 on a portion of track that was 20 meters above the ground only made these problems worse. The public's trust in the high-speed rail system that China has just spent hundreds of billions of dollars creating was severely impacted by this. The government's response was to sell the railways to the state-owned company China Railway, so semi-privatizing them. A year later, CSR and CNR, the two businesses in charge of building the rail cars, united to establish the CRRC. Chinese railways have roughly $1 trillion in debt, which they paid off using a combination of investments from local governments, bonds issued by public trading companies, and loans from state-owned banks. By the time China Rail embarked on its most recent building binge, the majority of the extremely lucrative lines connecting important population centers had already been completed. This meant that the new lines were being built to cities, which would not require as many trains, and thus would not generate as much money from ticket sales. Even though they weren't particularly profitable, the government continued to support these initiatives because they wanted people to have access to and from these lower-tier cities. There are several reasons why they did this, the majority of which were political. Sam from Wendover Productions made an excellent film on this. If you're really curious, watch it. Aside from misguided political objectives, there were other issues as well. China's high-speed rail system became such a source of national pride that its creators never really paused to consider whether there may be a more effective way to move people throughout the nation. If your organization is the Ministry of Hammers, everything starts to resemble a nail. Similarly, if you are in charge of China Railway, every issue appears to have a high-speed train solution. The Chinese government certainly enjoys the attention that high-speed rail receives and its amazing technical capabilities, but there are occasionally better choices. For now, simply use a regular rail. Because regular rail is easier to construct and maintain, tickets are also significantly more affordable. Losses from underperforming routes were offset by profits from extremely successful ones, and the state-owned firms even managed to turn a small profit after paying off its enormous debt. The interest payments on the collected loans have been rising faster than the rail line's operating income. This situation has gotten worse for a number of reasons, including the aging of the lines and the increasing need for maintenance, the inability of the rail companies to raise their fares without driving people back to the skies or buses, and the arrival of COVID, which destroyed the market for train tickets. China is now faced with a state-owned company that is $850 billion in debt and is unable to pay it back. Ironically, this has happened just when we would need another round of fiscal stimulus, like the initial high-speed rail development program from 2008. Of course, it won't happen, and the government has already stopped building any new high-speed rail, but that doesn't mean they are exempt from the issues the current network will bring about. Any profit-driven corporation would only be interested in owning the very profitable routes linking major cities if they tried to sell off the network to pay off these loans. As a result, the government would incur significant recurring costs. They might just shut down the trains, but it would lay off hundreds of thousands of workers and eliminate one of the most significant representations of China's economic achievements over the previous 2 decades. The last alternative is to renationalize the railway and bail it out. Yes, I know that China Railway is a state-owned enterprise, but it does have certain autonomy. None of these possibilities are particularly tempting, particularly at a time when China is dealing with the effects of a protracted epidemic, property market catastrophe, and an energy crisis. Even though we are usually wary of making predictions, it's impossible to imagine a scenario in which China just ignores these problems. Let this latest problem serve as a reminder, if nothing else, of why large-scale infrastructure projects like bridges, motorways, and train lines take years to plan and build. And that's all for today, guys. We'd love to hear your opinions in the comments section down below. Don't forget to like and subscribe for more informative content as such. Thanks for watching.